Well, great. Well, good afternoon, everyone. My name is Sarah Derdowski. I'm the Executive Director of the Global Energy Management Program. We're excited to have you on the call today, or the webinar today. This is the third part of our three-part series on the road to energy transition. Our first one started with kind of a global perspective on markets. Then we talked a little bit more about supply chain and electrification. And finally, rounding out the series here, talking about what could not be missed, which is kind of the Black Swan events that have happened surrounding both COVID-19 and just the oil market in general. So I am delighted to have our two panelists with us here today. But first, I just wanted to mention just briefly, why we put this kind of three-part series together, and then we'll move into kind of the format here. So essentially, we are a part of a public institution, CU, and so we really feel like it's our mission to provide public education about these topics that are happening in our global energy environment. So specifically how we do that is really trying to target either at the professional, public, or graduate level educational opportunities for folks. And so this really hits on that public mission that we'd like to do. So really trying to provide unbiased dialogue, a great place to have a conversation about what's going on, question it, and really gather more information from our experts. So that's really part of our mission and who we are. And so if there are additional educational opportunities that you are seeking, whether because of the job market now, or also just because you want to learn more as to what's going on in energy markets, we'd be happy to do that. So please feel free to reach out to me, ask questions, things like that about those topics, and we'll be sure to get some educational experiences out there for you. So to get things started, I'd like to go over the format of how we'd like to run this webinar before I introduce our experts. So essentially, the format is we'll have our panelists kind of kick it off with like a quick 3 to 5 minute. I have some questions I would like to go through with them to drive the conversation, get through all of our key points that we've listed. But at the same time, I want to have an opportunity for folks to ask questions at the end. So we'll allot about 10 minutes at the end, but I'd really encourage folks to ask questions during the webinar. So if you could chat those directly to us or in the question and answer section, and I'll try to incorporate them as we go along. It makes a lot more sense, keeps the flow of the discussion much better if we're asking them throughout the webinar. So please feel free to do that as we kind of kick things off, and we'll kind of keep the format that way. So let me introduce our panelists. First, I'd like to introduce Johanna Schmidtke. So Johanna has so much experience, over a decade of experience. Her background is actually more on the engineering side, advanced materials and energy efficiency. Currently, she's at Aura Partners. And previous to that, she was the director of Saudi Aramco's Energy Ventures. She has spent some time with First Solar, and then she holds her PhD in physics from the University of Cambridge, her BS in biochemistry from the University of Arizona. And then she also is a subject matter expert for us and teaches in the Global Energy Management Program at CU Denver on our strategic management courses. So she has a wealth of experience from a variety of different sectors in energy, and really kind of has her hand in kind of what's going on specifically with Aura Partners right now. So that's fantastic. So Johanna, we're delighted to have you here to talk about all of our strategic direction we're going today in energy. And then we're also joined by Chase Boswell. Chase is the managing director of Thunder River Productions. It's a firm focused on acquisition and development of oil and gas properties. Chase received his BS engineering and science from Vanderbilt, and he also has his MS in global energy management here from CU Denver. Yes, he's an alumni of our very first cohort. So also very delighted to have him and his perspectives. He also has a huge, rich family history in the energy sector. So pretty much I would say he's grown up in it, seen a lot that have happened over the years too. So offers a lot of real world experiences and maybe some of the challenges and stuff you all are facing individually as well. So a fantastic lineup here. Just before we get going, I thought it would be fun if we just did a quick poll. I'm just sending that out to everyone right now, if they want to just click on that. Curious as to how people felt about the COVID-19 crisis. They feel like that's really the cause of all this market uncertainty, that Black Swan event, Or would you have been concerned even with some of the Middle Eastern and Saudi talks beforehand? Do you feel like that would have been a black swan incident in and of itself? So just kind of curious to see what people think as that comes through. We'll give you just another couple of minutes or seconds on that. Great. So I'm just going to end this real quick, everyone, and then I'll share the results with everybody. So it looks like people felt like it was somewhat concerning, even prior to COVID-19, which is interesting. That there was definitely a difference in the market as opposed to when COVID-19 came in as possible double whammy. So. And some of you positive people were not concerned at all prior to it. So that's interesting to see as well. Let me stop that right now. Great. Wow. So perfect. So just to get us kicked off, what we thought we would do is, like, again, I have that list of questions and targets we'd like to go over today. But again, feel free to ask questions as we go along, and I'll be sure to try to incorporate and weave those into the conversations as we kind of move forward. So just to kick us off, Johanna, I'd like you to start for us. First, if I missed anything in your bio you would like to highlight, please be sure to do that. And then if we could just kind of talk about Black Swan events in general, just to get us kicked off, since you are a strategy instructor and stuff as well. And then we'll move into, so just if you could talk 3 to 5 minutes about that, Black Swan events in general, how you teach or discuss kind of mitigating some of those risks from a very high level, and then we'll jump into kind of very specific stuff as we kind of go through the webinar. So that'd be perfect. So Johanna, if you could get us started.
Great. Thank you, Sarah. I really appreciate the opportunity to be here. And I think right now it's always important to express to everyone, both online and in your different businesses, right, that this is this great period of stress for a lot of folks, and it's important to emphasize that very human element to what's going on. As far as my own background, I think Sarah, you covered it well. I'm a managing director with Aura Partners. We are a private equity fund. I'm based in Houston, Texas. And we were happy to announce on Monday of this week the close of our debut fund for $400 million to invest in the decarbonization of the industrial sector. So we are specifically focused on here and now technologies that can be implemented on a 3 to 5 year frame that offer a lower carbon option to industrial solutions. We currently have 4 announced investments within the space and 2 that are unannounced. And we're looking forward to having the opportunity to work with those platforms and a few others as we go through. But it's a fascinating time to be working on the decarbonization side, particularly because we have a mixed background on our team, quite a diverse background, and some good debates, where some of us have come from the solar industry and the materials industry, and others from the oil and gas industry. And meeting of the minds is very useful to sort of debate through those subjects. So it's, the current environment, you can almost become exhausted in discussing all the various outcomes that could be. But as far as Black Swan events and how, we, at least within the course, for instance, at CU Denver, that we start to talk about these is first starting with the definition of what a Black Swan event really is. And there's some interesting writing out there about how, whether or not either event really is a black swan or a reactionary measure to a long-term risk on the energy side, and in the case of coronavirus, a long-term known risk that eventually had its day. And as I was looking through for some background recently, I ran across the World Economics Forum Global Risk Landscape for 2020, which was released January 15th. And if you think about that, it's about 100 days ago. And it's interesting that both infectious diseases as well as energy price shock are well on the lower end of the scale of likelihood for 2020 in that survey. And I think that, comes to one, the reality of how quickly these have come on, but also two, that they have been on the map. It's just a matter of timing of what these things are. And so um, the discussion that I think is quite important as we look at all of our different companies is to say, what are the various possible outcomes, and to start planning to the extent that as is possible. It's it's the possible unknowns, but not the completely unknown unknowns. And many of those, as I'm sure we'll discuss later on, are the things that are the real risks to the energy market, and the the wide fields that are touched by the energy market in the materials and other industrials that will have may see substantial changes over the next 10 to 20 years. So I think it's a fascinating time to have those discussions and to be out on the lookout for where things have been overlooked recently, because I think that's highly important, but also what else might be out there that we're overlooking today.
Yeah, you make some really good points there, Johanna, and thanks for really defining that for us and putting it in context as, these could be black swans, but we also kind of, at least they were on the map at some point. So that's great. Thanks for doing that. And then Chase, just to kind of kick us off, anything I've missed, I know you have a long career in energy, please put that in there. But then also, if you could talk a little bit about how black swan events in the past have affected your career, because, you have been around for some others. This is not the first, and how maybe you feel this one is a little bit different.
Yeah, well, first of all, thanks for hosting. It's great to be here. And Johanna, it's great to be with you. I think it's appropriate that you were listed as a professor of the school that I was a student in. So that kind of tells you the levels here that we are in. So, Sarah, it's always great to be with you. As part of the original class from the GEM program, watching how you've evolved that program has been nothing short of spectacular. So congratulations to you on all your success, and thanks for continuing to carry that torch for everybody. I would say, I'm a third generation oil and gas man. My family's been in it. My grandfather started on the rigs and services side. My father has been involved and remains involved on the E&P side. And I've done some things on the E&P side and really been focusing primarily on minerals in the last several years. So one could argue that as a family, it would have been smarter to do it in reverse order of that. But here's where we are. And I would say that in my career, I haven't always been oil and gas. I started in financial services. And I was around when we had the Black Swan event of the mortgage-backed securities crisis. That was a huge event in my career, and I learned a lot from it. I would say it was the first time in my career where I learned to, question everything. We had a lot of the, rating agencies and people like that were kind of telling you that everything was rated a certain way, everything was fine. And I learned that you need to dig into what people are saying, why they're rating things, how they're qualifying things, because their version of stress may be very different than your version of stress when you think about stress testing things and modeling things that way. So that's had a large impact on how I've done things going forward. And in the oil and gas side, we've obviously, price volatility is nothing new, but we try to learn something from it every time. My dad's always cautioned me to use the good times to try to protect for the downside. So we've made a practice of doing that, and I'll get into that a little bit as we go along. Great.
Thanks, Chase. These are all really good points. And, we did have a question from the audience, which actually kind of leads into our first question, which is, Johanna, this one's for both of you, which is, how is this Black Swan or double Black Swan, as we talk about it, different than previous events? And so the question from the audience was, we were already going at a rate of production that was super high. Did COVID just simply accelerate this decline in prices? So that kind of hits on both of it, which is maybe how this Black Swan event is different. So Johanna, maybe if you could start too, and maybe you could talk about it from the geopolitical side, kind of elaborate on that a little bit, what that event was that helped to drive down those prices. And then we can talk about maybe how COVID might have accelerated that.
Sure. Yeah, no, I think when I look at it versus other, other events that I've worked through or that you've seen, right? I think the speed and the depth and the speed is what's remarkable in both of these cases. And it does come to the fact that they're concurrent, particularly in the energy market, but even in the overall markets, right? The speed and the breadth and the depth all combined is what's truly remarkable. As for the the energy market in particular, notably crude, there's a geopolitical element that is undoubtable here. There's some pretty great sources that I tend to keep up with, that walk through the history of the Saudi and Russian price wars, and the various cuts and relationships that they've had. Arguably, that's been building for some time, and the cuts, as well as the price collapse that you saw 5 years ago, was basically a prelude to what you see now. And the outcome of that was largely, for shale to win yet further share at the detriment to more traditional producers. And for those more traditional producers, on this go round, you could arguably say the stakes are yet higher in seeing that they have a positive outcome. And so, it'll be interesting to see what happens as you go through this. And there's really, no clear information as to what all the different players might have expected of COVID as they entered into that process. But it's very clear that the stakes are higher than they were 5 years ago in this round. And so the ability and willingness for certain reactions may be higher than it has been before. But that's, it all remains to be seen as well. Chase, I think you've got some great thoughts that are more akin to the local market as well in the U.S.
Yeah, absolutely. And thank you for the question, Alex. I would agree. I think when we look, I guess in short, Alex, I would say no. I don't think that this inevitably would have happened. I don't think there would have been as big of a crash as fast, as quick, and as deep. I think that when you look at typical forces that we've been dealing with commodity price volatility or energy prices, you're normally looking at supply side issues and geopolitical issues. And those things go hand in hand. And you have OPEC Plus out there flooding the market anytime they want prices to come down. They did that this time, just like they did, as Johanna mentioned, in 2016 to try to, I think to some extent, impact shale. Who knows their actual ultimate goals, but one could argue that was probably on their mind when they did that. The thing that's different this time, in my opinion, is strictly that this is a demand-based issue more so than any sort of geopolitical or pricing. I think the supply side has a piece of it, but I think 90% of it is driven by the black swan event of just a complete collapse in demand. If you were to tell anyone, a month and a half ago that in a 2 to 4 week period, transportation fuel demand would decline by 50%, I think they would have told you were crazy. I don't think anyone ever thought that was possible. And so what you're seeing is, the results of that. You're seeing the oil glut back in all the way up into the fields. You're seeing this market try to respond. I think OPEC Plus maybe didn't realize the impacts of what they were doing in conjunction with COVID. So that's why you saw them meet and agree to do to change their tune a little bit in April, I guess in May and June. In my opinion, it will not have the impact. I think there was a gesture. I think it will have an impact, but for the immediate crisis, I didn't think it was going to do much. I think you saw a lot of the outside influences on this market. If they're traders or people like that, you have a lot of people. When we saw WTI go negative, that was a black swan event in a lot of people's minds because nobody ever thought that was possible. But what you have was a lot of people who couldn't physically take ownership of a barrel of oil, and they own these things on paper, and that's the way that they've done this their whole careers. And so it became a liability to them, and they needed to get it to somebody that could. So you saw prices go negative because we're out of what? We're out of storage, and the storage capacity in this supply chain reacts typically to what is being produced, and that's a slow moving mechanism typically. And if things go up or down, in a more typical market setting, you would see our ability to adjust and use some of the floating options, excess storage. All of those conventional things have been exhausted now. And so you're seeing people have to shut in, and the market is having to really react. So that's why I think that, to answer your question in short, no, I don't think it would have. I think that we would have had other adjustments made over a longer period of time. And I acknowledge that we were producing at a historical high, 13 plus million a day. I do think that, as all of a sudden we become like a swing producer in a high price environment, I think that some of the geopolitical motives were centered around trying to knock that down and regain some of that market share.
Yeah, it's interesting. Yeah, if you could spread the risk over a longer period of time, it certainly would have made the market adjust and give it time to adjust. And I think that goes to a couple of questions that we had come in. It's really talking about the timeline. Both Frank and another one of our attendees want to talk about that consolidated timeline that we've kind of gotten from COVID or and so one of them would be, is this kind of foreshadowing technically, what electric vehicles might do to the transportation side, as we kind of bring oil or gas off the shelf for cars. And then the other is, will it have any effect as we start to actually come back online? Is there going to be, as demand starts to pick up, will there be price shocks in another way? So I guess curious, Johanna, maybe from your perspective, do you see this as foreshadowing some of that electric vehicles and how they might take some of that market share?
I think there's certainly, certainly a foreshadowing of what the long term can look like. And actually a topic that we spent time debating in the course that we're in right now is the impact this will have on electric vehicle adoption over the next near-term frame. On the long-term basis, the trends both demographically in the U.S. and in China and Europe are so strong that the interest there would have to substantially wane to not see long-term continued adoption on the electric vehicle side. But anytime commodities are down, it's always going to be commodities are down and general economic conditions are down, right? Conversion of large assets relatively on a personal basis are going to be impacted. I do think it is a foreshadowing of the fact that the amount of oil that is available, as is well known today at any given price, is substantially larger than what we would have imagined 10 years ago. And at the same time, the broad-based support and price points for renewable options, particularly in power, are far lower than anyone might have well imagined 10 years ago. And so that combination drives a long-term transition that won't be overnight. It won't be over 5 years or 10 years, but 20, 30 years, and you get to a situation where your transportation needs are substantially down. Now, long haul, jet fuel, long haul shipping are all to be determined, right? But it's going to be a pivot. You've seen it in the refineries over the past 5 to 10 years as they look to do their long-term planning, and they're already planning for lower gasoline volumes. And as you see that continued pivot, I do think it foreshadows it. At the same time, the timeline is what gets you here, and that's what's quite spectacular. And as far as the second question as to what does this do in the future, I think it to production. I think it really comes down to how long it lasts, right? And I think that's going to if it lasts 6 weeks, 6 months, 3 years, it's going to depend on how long that transportation demand is down to see what the overall impact is going to be on midterm timing, but. The general trend towards electric vehicles and a decarbonizing element to the environment has quite a lot of momentum, and one that I think will sustain through this. But frankly, the good ideas and the best ideas should make it through this gauntlet where others may not.
Yeah, I would add on to that, Johanna. I would say. In terms of electric revolution or anything like that, I don't know that this, I'm kind of neutral. I think that will continue to go as it did. And the reason for that is because if you have the price of oil coming down and you have gasoline at the pump getting cheaper, I think that there will be some price competition there that will keep people wanting to drive the cars that they have now or that they've known. I think that to the point you were speaking on just how long does this take? How long does this go on? I think that's really the big unknown here. And I think when you look at this demand destruction, it has been very swift. And I think, again, no one has been through this type of a pandemic in modern times that's been this far reaching. And so the answer is plainly, we don't know. We don't know how long. My sense is that it'll take longer to start back up than it took to turn it off. And so I believe that it will take a lot of time to get back. I don't think that the US, for example, is ever going to go back to 800 rigs anytime in the near future. We've gone from 800 down to 300 in a year. We've gone from 600 down to 300. These are ballpark figures in a month. That is swift reaction. And I just don't, it takes a lot more to get those things back into the field than it does to take them out.
Yeah. Well, want to kind of keep us on track. And so I really want us to kind of, we'll answer a couple more kind of these global perspective questions. And then we have a few kind of nuts and bolts questions that I want us to get into. I think people want to, see how it affects them or regionally how it affects them. So just curious, we've talked a little bit about how demand has certainly changed. And that, again, since this is such a global issue, it's not just here in the US, right? Everybody's feeling the effects of this. So Johanna, maybe have you start first. What are some of the huge differences on how this is going to affect, and by it, I mean the Black Swan incidents or oil prices and the market, different countries, and are there going to be different winners and losers, whether it's company, country, region, things like that? Where do you kind of foresee some of those changes?
Yeah, so I think the answer is absolutely it's going to have a difference, right? The Chase and I were having a good discussion on this one prior, but it's going to come down to how well prepared individual companies and countries have been.
Mm-hmm.
As far as different geographies, the interesting element, I think a lot seems relatively self-evident, right? That there's some countries a higher cost of production, and those will struggle for certain. In some cases, there is broad economic and societal risk there with that scale of loss of revenue to the country, and I think that unfortunately may play out in front of our eyes. But at the same time, there are some non-obvious elements to it. And if you look at some of the large IOCs that are interacting with some of these national interests in terms of their oil production, some of those contracts are quite long. For one hand, two, the government they're interacting with may have an opinion about whether or not to shut down, even though the IOC may have a different opinion based on market. But that royalty stream is incredibly important, and so you may see what would otherwise appear as irrational moves simply because it's not a pure P&L, right, basis for the wells that is making that decision. And so you may see people that stay online far longer than you may expect because there is that interaction between the government as well as the producer that's local. And that's the point that I think is a little bit more hidden, that is not necessarily going to be self-evident in the market where you have a pure capitalist approach in a lot of cases in the US. And Chase, I think you've got some great insights there on how the independents are being affected and what you hope you have today.
Yeah, I think that's a really good point. I mean, in a free market society in the United States, things have been discussed. Like just this week, they decided at the Texas Railroad Commission not to pursue pro-rationing again, as they did in the 60s. And the idea is that they kind of acknowledged they couldn't act as swiftly as the companies were to the normal market forces. So companies are shutting in their production, taking rigs out of the field faster than they could tell them how to do it. And so I think that in this case, the market is working. But I think you brought up a really good point. And I mean, that is some of the things that we've learned from the past iterations of different, big swings in oil and gas are, how do you maintain a healthy balance sheet, and how do you keep your debt low and stay within your covenants when those things can change, when prices come down. And so I think that you can look at companies today and they can have a healthy balance sheet. They can be in good shape, but if their hedge book wasn't up to date, they might still be in trouble. Or vice versa. They can have great hedges, but still have too much debt. And now when the covenants change, they get in trouble. And so I think what we've tried to do in our company is always try to be proactive in your strategies. You can't You can't be reactive to these forces, because you have to go in with a goal, and you have to be consistent and disciplined. So you have to always have your hedging strategy, thinking about different things that can happen. You also need to understand how your partners or people in the business within you, which you play, how they might react. So is it possible that they could try to cancel their contracts, things like that? Because that's what we're seeing right now, all over with some of these smaller independents. Their contracts are getting canceled, and they have nowhere to take their oil.
Yeah.
So that's a real challenge. You got to think through those things and really understand where you're, all of the different bad things that can trickle down from an event like this.
Yeah. And you guys both have this experience, but Chase, a little bit more from the independent perspective. Phil has a question talking about basically when are energy finance groups going to get back into the market? When are they going to start, feeling comfortable lending again to some of these smaller companies, which I'm sure they're all very interested to know. But any thoughts, and Johanna, from you as well on, maybe when that timeline might be?
Yeah, I'll start and say that it is a different time. It is a different energy industry, or oil and gas industry as we know it. There are a lot of new public pressures out there centered around environmentalism and climate and all those things. And some people that has impacted some of their willingness to be in this industry. Some of them look at just the capital destruction that has happened in this industry as a reason to not want to be there. Some look at the debt load that's already in place as a reason not to be there. So to Phil's point, I do think it's going to be challenging to find capital from your typical avenues. That doesn't mean that there won't be new avenues that are created. I think if there's ever opportunity, or people view, there's a deal to be made, or that they think they can get really good assets, typically people get creative and find a way to bring that capital into those opportunities. So I think it will be slow at the start. I think there's already groups out there that are kind of quietly have some money to deploy, that you just have to really kind of go back and pound the pavement and try to go through your network and figure out who those people are that are quietly trying to put money to work. They're not broadcasting it like they normally would. So I would agree with Phil, but I think over time there will be capital to meet the opportunities.
Yeah. Johanna, any comments on that?
No, I mean, I think you've covered it well. The one thing I would say that is the combination of, you've seen a wide range of announcements internationally, right, for pension funds in particular, and retirement funds to pull their funding out of carbon-based assets. And that, combined with the returns that some of those funds saw in the 15-16 timeframe, will cause a lot of caution. And so when you add this third factor onto it, the funds that are funding the groups that are funding the oil is where the bottleneck may be. But if the returns are high enough, it turns out that there's some some enterprising folks on a regular basis. But I do think that capital structure that led the recovery of the past 5 years and led to the buildup prior to that have been hurt by both this set of events, as well as 2016, as well as the overall interest in pulling out of fully carbon-based assets.
And I think I agree with you, and I think that'll also speed up, I think, some of the consolidations that we would anticipate seeing as well. And but yeah, I think, again, my point is, I think is once it becomes a buyer's market, it may not be the traditional capital that you are used to seeing, but there typically people will, if they think it's a good buyer's market, they will come.
I appreciate the glass half full perspective too, Chase. It's nice to have that in these crises and stuff. Well, I'm going to combo a couple questions. Claude, being our engineer that he is, asked a question of basically talking about how it's not just shutting a well in, right? And we all know how complicated that is, and additional expenses and things like that. But just thinking about it being more complicated in general with the U.S. market kind of closing off. We mentioned a couple of challenges. Storage obviously is one of them. Supply chains. Talking about the U.S. being energy independent. But maybe if you guys could talk about the opening up of that, how that's also going to make it more complicated to get the market kind of up and running a bit more.
Yeah, I mean, look, it's the Wild West. I don't think anyone has a solid answer to that. And if they do, I'm all ears. I think this is a really difficult time. I mean, you're talking about our president basically contacting OPEC Plus and trying to quote unquote, just talk with them to, have diplomacy. This is unheard of. I mean, we're normally on the other side of the argument saying, you guys are ruining our free market economics. So it's going to be different. It's going to be very difficult. I think there was something coming out where they're going to, just like everything else, I think they're trying to just delay everything so that if you're shutting in a well, I think they're trying to, at least on federal lands, I think they're trying to give you like a COVID delay where that, you won't lose your lease if you do that. So they are thinking about those things, but true to form, I mean, it's going to be a slow evolution as they start to try to weed through legalities and things like that. And I think you're going to see just a lot of chaos for a short term of time. And then you'll start to see some regulations come in after that.
Yeah, no, Chase, I think you put it well, right? I think we're so deep in the fog at the moment in terms of reaction by different entities that it's hard to see where that may come up, especially if there's any further snapbacks in terms of restrictions in the U.S. or Europe.
Yeah, well, and something I wanted to us to kind of talk about is especially being in Colorado here, we have different rules and regulations and things like that than other states and other regions and countries too. But I'm just curious, how can we ask some of these companies who aren't these large companies and who maybe didn't feel like they had luck on their side when all of this hit, to think this longer term so that it can get out of survival mode, essentially, right? So how can we expect them to do that, or how can we encourage them to do it, so that they can make it through this crisis to hopefully, play another day in the space?
In the oil and gas space, I would say, look, this too shall pass. I mean, again, this is not a fundamental supply issue. There's elements of that in there. Absolutely, supply was trending higher than it needed to probably. But this is driven by a collapse in demand. As the economies around the world start to open up, we don't know exactly what to expect. Should it be lower demand? Absolutely. I think you're going to start seeing some thematic things. I think business travel, for one, will be much like, people will consider, do I really need to go there to do that, more than they did before. Office space, I think, will take a hit. I think that people just doing what we're doing right now, like one of the three of us on this panel is in an office. You know what I mean? So people will start to figure out that, do I really need the office space? Do I need to pay for that? So things are going to change. So the demand structure is going to change. But that could also increase in other areas, developing countries, places that couldn't afford that cheap abundant, energy-packed fossil fuel energy before, maybe able to do that now. So it's a little tough to tell at this point. But I would just say, if I was talking to someone, if you're in the if you have the financial fortitude to stick through this, I do think that the demand for this product will come back.
Mm-hmm. Chase, I think it's a great point, right? That this is an event, and we will come out of the back end of it. Back to the question of how can you expect people to think beyond survival mode? Unfortunately, I think there's really no choice, and part of it is because of the uncertainty that we've already mentioned 10 times on the call. But I, for instance, CIDRAP, which is out of the University of Minnesota, came up with 3 different scenarios this week of what they see as possible epidemiological bases of what could happen, and they look what could be fairly rational descriptions, but in detail saying this is the way that it might play out, and you can believe or not believe the extent of that or which scenario may happen, which all look very different. But the reality is there are resources out there to start that scenario planning, to say, if this is 3 months, 6 months, 3 years, what are the realities in demand destruction? What are the realities that we're going to have to face? And the other piece is, what is it, if you have a continued interest in decarbonization, which arguably, when you look at the facts around the facts around how much this is how much COVID has impacted different economies. And if you look at the scale of what, in some forecasts, it could be in terms of climate impacts, this pales in comparison of what could happen in some regions. And so you've got to look forward to say, okay, if there is a continued interest for renewables, and yet you have a need in the industrial sector to have fossil-based fuels, what are the demands that might be put on independent producers? So, for instance, the responsible generation of natural gas and the responsible generation of crude is incredibly important. The number of sensors and availability of drones and flyovers is increasing, and there were a number of instances at the end of last year and the beginning of this year where small privately owned, private equity-backed groups that had no one ever heard of made the front of Bloomberg because of a flyover of a methane emission. And those realities are only going to increase, not decrease. The need to improve in terms of your digital strategy, your remote strategy, that has, Microsoft came out and said, look, we've done as much in digital transformation in 2 months as we may have done in 2 years because of COVID. But looking forward to what those strategies really could be, assume that you've got to get through one of the, a scenario, whatever scenarios you want to plan on, but make sure at least one of them is an upside and a downside. And then on the far side of that, what demands might be put on you that you can meet, so that you are on the responsible side of requiring a much needed product into the market.
Yeah. And well, I think this, kind of leads to a larger conversation, which is, the future forward, looking both at, what does the energy profile look like, maybe globally, and then also just the future in general for, we've talked about energy demand a little bit, but, thinking about risks and things like that companies need to assess. And so curious, what are you guys' perspectives of kind of what does that future profile look like? Johanna, you alluded to, some of this kind of like greener production. We had a question from the audience, would perhaps dry plays do better because, gas is going to be more readily acceptable kind of in this new world that we're living in. And so, curious how climate plays into this future conversation as we look at, look back at this incident as a Black Swan event. So, either Johanna or Chase, feel free to chime in on that first.
Okay, we're both nodding at each other. Yeah. So as far as climate, right? I think there's plenty out there, and I can see a question. I think you're on the chat as well, asking, right? What is the role of climate initiatives and decarbonization because of COVID? Do you cause such an economic crisis, which certainly you saw in 09, 10, right? A lot of the startups, particularly that were sugar-based, sugar-based fuels, sugar-based plastics, saw a decline as commodity prices fell and they were out of the money. But the reality is some of the super events will continue on the climate side, despite the fact that we're all now, spending our days concerned with COVID and the impacts of it. And I sit in Houston, right? Imagine if something the equivalent of Harvey were to come through in the middle of the summer, and you would have to put 10,000 people into a single location in order to house them. Those types of events that are, they're not out of the realm of possible. And so the need to address climate risks is there. Certainly in the European Union, there are hopes that some of the stimulus post-COVID and to get out of COVID will drive get out of the economic impacts of COVID will drive for greater sustainability in products. Thus far, if you look at the demand for more renewable, recycled products within the market, they view that as a 5, 10, 20, the buyers view that as a 5, 10, 20-year plan and not something to be delayed by COVID. So, ultimately, I think everything across the board economically may see some impact, but the larger story is a long-term strategic one that you've got to plan for in that long form, 3-year, 5-year reduction. But at that point, a lot's gone off the rails. And so within the frame of what we see, we continue to see an interest in the decarbonization of a lot of materials and fuels.
Mm-hmm.
Yeah, and I would add to that. I agree. I think you will still continue to see growth in the renewables, and I think that'll go hand in hand with an increase in energy demand across the board. And I think it'll depend on where you are to talk about what the portfolio mix is. I think in a very developed country like the US, you're going to see renewables continue to grow and outpace the growth from a percentage standpoint, even though it's a smaller piece of the mix. But I think in developing countries, I think you might see a little bit of the reverse where they need to, establish some of the grid technologies and things like that first. And they may do that using the cheaper fossil fuels, hopefully natural gas, huge proponent of that. So really do believe that that's a fuel that is cleaner burning and is abundant and can help us kind of bridge this gap over the next several decades.
You know, I think one thing that we've skipped over is what those other risks might be, right? Climate is clearly one that's there, but you know, cyber is out there and is another one that I think is particularly important because of the speed with which it could strike. Whereas climate is sort of it can have very super events in specific locations, but the overall tread is a slow moving train. Whereas not that it's not one that needs to be addressed, but one that has to be addressed over a significant period of time. Cyber events are ones that could cause the same kind of very quick events as you've seen today. And that's where, particularly as you have increased digitization, increased removal of workforce from sites, increased digital access to sites, I think the energy industry in particular needs to be extremely careful in how it responds to this crisis to make sure it doesn't set up yet another one.
I think that's an excellent point. Go ahead, Chase.
One more risk that I would bring up too, I think, is trade wars. I mean, I think you're seeing it every day now, and regardless of your politics, it's important that we have diplomacy around the world, specifically when you have things like medicines and pharmaceuticals and things like that that might be being manufactured not on our soil. And so we saw kind of like a little piece of like what that can look like. We're seeing a little bit now with protective gear for people, for the people on the front lines. We're seeing how hard it is to get some of that and what the supply chain constraints can be. And so if you're in a true trade war and they shut those things off, that can really trigger a more central or a localized black swan event. So that's another risk, I think, looking forward, that as a country, we really need to understand what our exposure is and try to fix that.
Yeah, I mean, I think you both hit on a good point when I think of cyber. We've talked a lot about oil and gas prices and things, but as we look at electrification and the decarbonization in general, looking at the grid is a major issue, and cyber is certainly something that keeps power people up at night. And we could probably just talk about that for a day in general. So just kind of want to turn it a little bit to kind of think about the workforce a little bit. Thinking of this as a huge black swan event and things that have happened within kind of oil and gas. We've seen that very specifically, but curious kind of your perspectives on how this is going to, obviously we've seen unemployment numbers, things like that. How is this really long-term going to affect workforce from kind of where you all sit? Will they be able to move into some different directions? Kind of what are some suggestions there?
I mean, again, I'll repeat it. I think you're going to see a lot of people start working remotely. I don't think everyone's going to, I think a lot of people are going to realize they don't all need to be in the office. And I think a lot of it remains to be seen. I think if this thing comes seasonally and, the fear rears its head and people act as if they don't want to go outside and they're fearful, I think you're going to see a lot of people adjusting to having a more digital workforce. Mm-hmm. But that can also provide incredible efficiencies. I mean, those dollars that they're using on rent can go to other things. So I think that, like with anything, there's going to be silver linings. We'll start to see those as they evolve. I think it's a little early to be able to tell exactly what they'll be, but I think that there's going to be a lot of trends that shift, like travel. Like, again, I think is going to just be very different moving forward.
Yeah, the point on travel, I think, is particularly acute. If you look at some of the data out of China over the last break, right, that was extended, it was only, I think, at 50 or 60% of volume, right, that they had expected in terms of travel, and after the opening. So the future of travel, including the fuels that go along with it, And the balancing of refineries, for instance, to meet those needs is something that is still yet to be fully manifest in the market, in my opinion anyway. So it'll be interesting to see. I do think, though, there are opportunities here, right? At the same time as the number of workers needed in the field may be reduced, particularly if there's a lower production level. The number of individuals that are needed to the number of opportunities there are on the digital side will continue to increase. The number of opportunities in terms of analytical capability matched with industry knowledge will continue to increase. And I think as you look at the opportunities to bridge, to truly make natural gas a bridge fuel, and the cleanest one that it can be, there's opportunities there, right, in traceability and all of the technologies that would be required to really prove its potent use as a cleaner burning source over the next 20, 30 years. Those are all incredibly open areas for development, and ones that are rapidly going to be pushed forward because of this environment. And so I would look to those opportunities as places where there's likely to be increased and aggressive hiring for folks that have a native digital capability as well as industry knowledge.
Yeah, I think those are good points and good suggestions. And then obviously it's still an evolving situation. So just kind of watching it every day. Just curious as we kind of look forward, the name of this webinar is On the Road to Energy Transformation. We all know that energy is moving in a different direction regardless of these events have happened. And by moving in a different direction, it's just transforming on how we use it, efficiencies, things like that, how we get it, how we access it. So kind of curious from that perspective, there could be different camps, as we're trying to come out of this hole, or to get recession, not be in a recession, and kind of get business going again. Do you think there would be some time spent on, hey, let's just get the country and the markets back up and running, and then we can focus a little bit more on climate? Or do you think this is a good time, like this is a transitional point that we're in right now, and so let's just take a completely different turn, and we'll keep our efficiencies. We have a lot in storage right now, and let the market kind of work itself out a little bit that way. Just kind of speculation here, but just curious kind of what your thoughts are. And I know you both sit in kind of different spaces. It'd be interesting to hear.
Yeah, I would say, and I'll start if that's okay, Johanna. I would say, and I kind of touched on some of it, I think historically when fossil fuel prices rise, you're going to start seeing research on all these renewables and things like that. And I think we've seen that. Again, the difference this time is social pressure, environmental pressure, climate pressure. We're smarter. We're starting to understand the impact on our industrial processes on the earth, and we're trying to do better. That being said, I just don't know that when prices come down like this, that's when all of a sudden everyone's going to say, now's the time. I think in an idealistic world, people would do that, but I don't live in that world. I come from one of reality. And I think when people look at the energy density they get out of a gallon of gas and how cheap it can be, I think that right now in the moment, in a crisis, they're going to say, I want things as normal as I've had them for as cheap as I can get them. And they're going to maybe come back to that in the future. There's going to be people that are still pushing this, and God bless them for doing it. But I just think the general population is going to maybe be less concerned with that right now and more concerned with surviving.
Mm-hmm. Certainly there's, I think, again, I go back to there is a need, there is a great and realistic need that so many people have right now, and they will have to turn to the sources that they need in order to move forward with that. So I think that's a point well made. I think where the interesting climate should come, whether or not it does, is in the hopefully the longer term planning for what reaction needs to be out of this. The breakdown of supply chains for many commercial products, the breakdown of industrial supply chains for many commercial products, the reliance on partners that may not be partners. And that's where you have a choice to build. You have a choice to build dirty or a choice to build clean. And yes, you may have to use more fossil fuels in in some aspects in order to do so in the near term. But there's also the opportunity again to make sure those are cleanly produced, well produced by an honest, and straightforward sources. And that's the opportunity for the energy industry to really show its best face. At the same time, there's arguably a great need for jobs creation and industrial creation within the U.S. to make up for things like travel and restaurants that frankly aren't likely to come up in a very near term. And that's where you have the opportunity to go build waste handling facilities that are responsibly handled. You have the opportunity to go build manufacturing facilities that have best-in-class power production, power sourcing, and energy sourcing in order to make a viable industry locally. And you can both drive near-term demand as well as job creation, but also be prepared for the longer term. To me, my biggest fear would be that everything would pull back, and what you end up doing is still being relatively unprepared for an energy transition in 5 to 10 years time.
Yeah, it's absolutely a transitional time, and it's hard. We can't think. We want to think long term, but it's hard to even make plans now. So, but there certainly are some bigger picture pieces here. Certainly. Well, just to end on a positive note, I would love to just mention that Black Swan events are not always negative. There are certainly positive ones, and so we've mentioned a couple kind of future risks that we could see. What are some potential maybe positive Black Swan events that we could foresee for the energy markets?
You want to go ahead, Johanna?
I think if you have a significant I don't know if it's a Black Swan event, but if you have a significant balancing of supply as demand comes back, you could have periods of profitability here for producers that are particularly hard hit, and for those that are extremely well managed through this period. Let's hope that there's an excellent return for them on 2-3 years down the line when hopefully everything has stabilized and you may well have increased demand. I do think there is a tremendous opportunity, and one we look at it a lot in waste to value. And particularly as you have a shutdown of the Chinese waste markets and then the subsequent shutdown of many other waste markets that cascaded from there. The view of waste as a resource and not as waste, at least for the more valuable portions of it, that is an opportunity that can be served very locally and can produce high value goods and frankly is well served by those that are familiar with petchem, with energy, with products, with industrials. And that's really a space where there is that opportunity to both solve a problem as well as take advantage of a resource that's been overlooked and shipped abroad to date. So I think there certainly are opportunities there, but people have to be able to go out of their house and shake a hand first.
Yeah, and I would I completely agree with that, and I would say for me the upside remains what it's always been for me, and why I moved into this energy industry in the first place, and that is that energy will always be needed. So whether you're representing renewables or fossil fuels or something in between, energy is going to be in high demand for a long time coming, and it's only going to increase as you see everyone plugging in their iPhones and their iPads and their computers and everything else. Population growth is another issue, and that's maybe we'll do another panel on that sometime. But I remain steadfast in my belief that energy is one of the world's greatest commodity and always will be, and so that's why I'm proud to be in that business.
Yeah. Well, I couldn't agree more. I'm such a positive person when it comes to energy. It's obviously something we need, we use, and it helps folks as much as possible. So I just want to say thanks so much, Chase and Johanna, for sharing your insights and expertise. We had more questions that came in. So obviously there's a high demand for some of this knowledge that you all are sharing. And so really,
I'll answer some of those offline.
That'd be great. That'd be great. Certainly, again, happy to have you both here and to participate in this webinar. It's been really kind of fun, kind of dissecting this out a little bit more and hearing your perspectives. And so I really appreciate it. And I just did want to chime in for our audience, let you know, we talked a lot about educational pieces of things we can do. We do have a couple of energy analytics courses coming up fully online. If you have some time and you'd like to retool, please jump online and check those out at business.ucdenver.edu/GEM. Aside from that, again, panelists, thank you so much for participating. And yeah, we appreciate your time.
Johanna, it was a pleasure and an honor, and thank you very much, Sarah.
Thanks.
Pleasure as well, Chase. Thanks.